Here are the crypto top headlines covered in this video. Coinbase to launch DOGE futures says it transcended meme origins. Next, pundits worry SEC's Ethereum probe could be used to hold back ETFs. Also, GBTC outflows top $358 million, but one theory suggests it's almost over. Welcome to Crypto Top Headlines, where there's no clickbait thumbnails or titles, and no speeches on my opinions, just bringing crypto's news to you. We have a quick request that doesn't cost you anything in order to help. Help us grow this channel to 1,000 subscribers by September, which would be our channel's 1-year anniversary. All we ask is that you click on the like and subscribe buttons, as well as the notification bell. By clicking on these, it does help grow the channel, so thank you in advance for doing so. Now, on to these headlines. Our first top headline, Coinbase to launch DOGE futures says it transcended meme origins. Crypto exchange Coinbase has announced plans to launch futures trading for Dogecoin, Litecoin, and Bitcoin Cash as soon as April 1st. Crypto exchange Coinbase believes Dogecoin's enduring popularity suggests it has transcended its meme origins to become a staple in the cryptocurrency industry, with the exchange now planning to launch futures trading products for the cryptocurrency. In 3 separate letters to the United States Commodity Futures Trading Commission, or CFTC, on March 7th, Coinbase Derivatives announced its plans to launch cash-settled futures contract products for Dogecoin, Litecoin, and Bitcoin Cash as soon as April 1st. Notably, the letters said that Coinbase Derivatives could list the futures contracts on its platform before receiving any official approval from the CFTC. Coinbase explained that it would invoke the self-certification method to launch the futures contracts so long as they followed the regulatory guidelines laid out by the agency. Coinbase Derivatives hereby submits for self-certification its initial listing of the Dogecoin futures contract to be offered for trading on the exchange on or after April 1st, 2024, read the letter concerning the Dogecoin futures product. Coinbase justified its announcement of listing Dogecoin by claiming that the meme coin had transcended its origin as merely a joke and had risen to become a foundational element of the crypto industry. Dogecoin's enduring popularity and the active community support suggest that it has transcended its origins as a meme to become a staple of the cryptocurrency world. The price of Doge is currently up 17% on the day and is trading for 15 cents at the time of publication, according to data from CoinMarketCap. While several market commentators across social media seemed puzzled by the move, analysts hinted that listing futures contracts could have been a calculated move by Coinbase to force the hand of the Securities and Exchange Commission. In a March 20th post to X, Bloomberg Exchange Traded Fund analyst James Seifert noted that the filings may have been a strategic play to force the SEC from classifying any crypto assets that were based on the same proof-of-work consensus mechanism as Bitcoin from being declared a security. Wonder if the SEC objects to these being classified commodities futures versus securities futures, wrote Seifert. These are all based on Bitcoin, so these are securities. Claims would be hard to make after spot Bitcoin ETF approvals. In 2022, Coinbase acquired the CFTC-regulated FairX Derivatives Exchange to roll out crypto derivatives trading for its customers in the United States. Coinbase stated at the time, "We want to make the derivatives market more approachable for our millions of retail customers." Let me pause here for a moment. If you're getting value out of this video, please click on the like and subscribe buttons as well as the notification bell. Our next top headline, Pundits worry SEC's Ethereum probe could be used to hold back ETFs. The SEC's reported investigation into the Ethereum Foundation could explain why the regulator hasn't been forthcoming with prospective spot Ether ETF issuers, some suggest. The reported probe into the Ethereum Foundation could be part of a coordinated attack on Ether and may be used as a reason to deny or delay spot Ether exchange-traded funds, according to industry pundits. On March 20th, Fortune reported that the United States Securities and Exchange Commission issued several subpoenas to companies that have worked with the Ethereum Foundation. Sources familiar with the matter said the Commission had launched a campaign to classify ETH as a security in 2022. The SEC has no good reason to deny the ETH ETP applications, argued Coinbase Chief Legal Officer Paul Grewal in response to the news, noting that SEC Chair Gary Gensler once testified before Congress that Ether is not a security. We hope they won't try to invent one by questioning the long-established regulatory status of ETH, which the SEC has reportedly endorsed. That's not how the law works. This now very obviously feels like a coordinated attack on ETH, said Travis Kling, Chief Investment Officer of Kigai Asset Management, in a March 20th X post. I wonder what's going to happen. Fox Business reporter Eleanor Terrett even suggested that the subpoenas could explain why the securities regulator has seemingly been reluctant to engage with prospective spot Ether ETF issuers. The regulator's seeming lack of engagement is one of the main reasons why Bloomberg ETF analyst Eric Balchunas and James Seifert recently reduced their odds of an approved spot Ether from 70% to 25% by May. Meanwhile, Patrick McHenry, chair of the House Financial Services Committee, and others have shared disapproval of the reported move, saying it would be contrary to the regulator's previous actions. Brian Quintez, a former commissioner of the Commodity Futures Trading Commission, also argued that the SEC had already explicitly acknowledged the non-security status of Ether last October when it approved Ether futures ETFs. However, Cardano founder Charles Hoskinson believes the SEC may have changed its mind on Ether's security status after Ethereum transitioned to a proof-of-stake consensus mechanism in September 2022. But Quintez argued the SEC would have factored the Ethereum merge into its decision to approve the Ether futures ETFs, as the former event occurred before the latter. If Ether were a security, it would mean CFTC-listed Ether futures ETFs would be illegal, as any derivative of Ether would be considered a securities futures contract and thus be subject to different rules, Quintez explained. It will be interesting to watch what, if any, excuse the SEC uses if it were to delay or deny an ETH ETF, given it has already informed the market on ETH being outside its jurisdiction, added Quintez. For now, the SEC has continued to delay its decision on spot Ether ETFs applications, punting them back to May or later. Applicants include BlackRock, Van Eck, ARC 21 Shares, Fidelity, Invesco Galaxy, Grayscale, Hashdex, and Franklin Templeton. Balchunas and Seifert now predict the spot Ether ETFs will be denied but expect an approval to follow sometime before 2025. Our next top headline, GBTC outflows top $358 million, but one theory suggests it's almost over. It's been another big day of outflows from Grayscale's Bitcoin ETF, but ETF analyst Eric Balchunas believes they will taper off soon. Crypto asset manager Grayscale's Bitcoin exchange-traded fund, has notched another day of high outflows as nearly $359 million exited the fund on March 21st, but analysts think the exodus could soon be coming to an end. The Grayscale Bitcoin Trust, GBTC, March 21st net outflows of $358.8 million follows a massive week of outflows, with its $642 million on March 18th being the largest day on record, per Farside Investors data. The latest figures bring this week's total outflows for GBTC to $1.8 billion and mark the fourth consecutive day of net outflows across all 10 Bitcoin ETFs. Senior Bloomberg ETF analyst Eric Balchunas speculated in a March 21st X post that much of Grayscale's outflows could soon draw to a close, with the majority of them coming from bankruptcies of crypto firms due to their size and consistency. Any Gemini/Genesis outflows likely buying BTC with cash, hence market holding up, said Balchunas. Takeaway: the first is probably close to being over. Once it is, only retail will be left and flows should look more like the Feb trickle, he added. As of March 21st, Grayscale reported that its Bitcoin Trust held a total of $23.2 billion in assets under management. GBTC has shed $13.6 billion since being converted to an ETF on January 11th. In line with Balchunas, pseudonymous independent researcher Ergo BTC suggested that approximately $1.1 billion worth of GBTC outflows over the last few weeks appears to have come from bankrupt crypto lender Genesis. Resulting activity volumes and timings of funds out of GBTC and into Genesis match pretty well, Ergo BTC said. Simply, there just aren't that many 2,000 BTC transactions per day, so likely the GBTC outflows and Genesis inflows are related. Pseudonymous crypto market commentator Whale Panda offered a similar sentiment, pointing to a March 19th statement from Genesis that said the firm would be returning assets to creditors in kind, meaning that the defunct lender would be selling GBTC shares for Bitcoin. On February 14th, Genesis received approval from United States court to begin liquidating its $1.3 billion worth of GBTC shares in a bid to repay its creditors. Nearly a month prior, bankrupt cryptocurrency exchange FTX sold 22 million GBTC shares valued at nearly $1 billion, completely liquidating all of its holdings. So this concludes Crypto Top Headlines. If you haven't already done so, don't forget to click on the like and subscribe buttons as well as the notification bell. Also, leave your thoughts in the comments and share this video with your friends and family. Thank you all for watching Crypto Top Headlines, bringing crypto's news to you.